Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the euro currency. Yes, the price action was really shallow and stand in the tight range. It's not much dynamic was during the previous trading session, and probably that is the thing that we should expect, since tomorrow we will see the Mr. Draghi speech on the European Central Bank rate decision, and overall investors in general expect some more transparency concerning European Central Bank policy in the nearest future. And in fact, as we have discussed in our weekly research thread in our forum, there are two moments that will be significant for investors on the coming event. The first one is the rate decision itself. The second is situation with, if we could call it, European quantitative easing, that is the buying back the debt of Spain and Italy. And if we will discuss the two different poles of this potential decision, the most negative scenario will be if European Central Bank will decrease the interest rate and will tell nothing particular, we could say, about the potential and program of buying back of debt. That will be the mostly negative, since investors and market already have heard rhetoric and speeches of the Draghi about that European Central Bank will do anything to save the euro, and even some non-traditional methods should be applied to somehow influence on the current situation in the Euro Union. So that speeches already have been said, and investors currently will expect some definite steps, some precise action from the Mr. Draghi. So just the hawkish rhetoric will be insufficient to support the euro currency. The most aggressive and euro-favorable scenario will be if European Central Bank will hold rate unchanged, and we will hear some definite hints, about some definite steps that European Central Bank intends to take in the nearest future. That will be very supportive for the euro currency. Well, that's why on the eve of such events, when should be very significant, the price action usually couldn't be treated as just in one direction. And let's take a look at the daily time frame. What we see here, on the first sign, this current price action doesn't suggest any more possibility to upward continuation. Why? Because what we see during the whole week, we see the calling inside of such kind of range. That was the butterfly finally. So that's overlapping bars that stands in very tight consolidation. What we see on Fridays on Bernanke Jackson Hole speech, jumped out and breaking out this consolidation that was formed by the expectation of this event. But what happened next? Market has returned right back in this consolidation. That is not very bullish. Well, by this action, market as well has completed the butterfly sell at 127 extension. Okay, returns right back. So what do we see currently? Currently, we see that market is trying to shift trend on the bearish side. So you can see this now price stands below this red line. That in fact the derivative MACD indicator that shows the break-even point of the trend direction. And now this unconfirmed trend stands on the bearish side. That is also the moment that we should wait should monitor closely, since, as you know, we could get the stop grabber pattern like here. So we can see in the beginning of the trading session market has shift trend to the bearish, but at the end of this hasn't confirmed and hold trend on the bullish side. Then you can see what happens next. Market take out the previous highs. So that could happen again. I do not want to tell that it has to happen, but if market will form the stop grabber is here, or other words, the failure trend shifting pattern, then we could expect to taking out of these highs. So what we have to watch for? First of all, we should keep an eye on this lower border. That is weekly pivot support 1. It's 122. Around, I suppose, 124.80 area. That is also FIB support, and that is the lower border of this consolidation. So if market will truly break it to the downside, it will accomplish some major points. First of all, the trend will shift to the bearish side, and this shift will be confirmed. Second, market will pass through this long-term support on the daily time frame, this lower border of this parallel channel. Okay. In this case, the next area to watch for is 124, as we said previously, since this is daily confluence support. Also, that area stands in agreement with the target of this breakout, because following the classical approach to the trading of the rectangles, breakout of some consolidation, we should count the width of this consolidation to the downside. And you can see this will be approximately the same distance. That will be also the target of this breakout, the minimum target of this breakout. But still, I want to point that market is not done with the upward continuation. At least not all chances are gone. So some chances still exist. And the first one you could see on this chart. So if it will be the stop grabber, that is the first point. Now let's take a look at another moments. You can see on the 4-hour time frame what do we have. Yes, we see solid bearish divergence with these stops. Okay, but take a look at the harmony of these moves. This is some sort of the inside small channel that just has started inside of the long-term channel inside of this one. So that is the smaller upward channel. You can see that this top stands at 127 extension of that swing to the downside. And obviously, since this was our butterfly pattern. Now, you can see that market currently accomplished the same retracement. The depth of this retracement are the same. Also take a look at the slopes. The slopes is also the same. And if market will hold above this support area, you could see that 127 extension of that swing stands right here. It's 126.60 and coincides with the 1618 extension of the first swing. That is very typical formation for the 3-drive sell pattern. So that could be the first drive, second drive, and that could be the third drive pattern. That is a reversal pattern. Also, another moment that very common for the 3 drives is divergence, and very often 3-drive pattern as well as wedge pattern consists of two side-by-side butterflies. So I can't exclude that this is still possible, because before the European Central Bank meeting usually we will see almost always a significant volatility, and that could lead to some sort of this price action. So if market will hold above this line, okay, in this case we still can count on this potential upward continuation. Another interesting moment you could see on the hourly time frame. Sorry, just a minute. It's right here. So that's a bit contracted chart of this consolidation. One thing that I would like to show you is this hidden bullish divergence. So you can see that market is forming high tops, but MACD indicator is forming the lower lows. So high lows, lower lows. That is the hidden bullish divergence. And this is not very significant, not big deal about this, since this is just a add-on to the analysis that we just made. But still, this is some sort of the bullish moment, and I just would like to show you. Okay, So what we could do in the nearest future? The conservative tactic will be just to not have any position during the European Central Bank meeting. If you would like to buy and you have the bullish view on the euro currency, watch for this level and watch the patterns that could be formed here, some bullish patterns to enter on the long side of the market. Of course, we do not want to see some kind of the strong bullish candle, long bars to the downside. And if this will really happen, then it's not the time to enter on the long side of the market. This retracement should be gradual with not significant bars to the downside. If you would like to enter short, then first area to watch for is 126.60. Well, but more preferable area is the area that we have announced in our weekly research. Well, and stands around 128.50, 129 area. Since this is really will be significant area of resistance, we have talked about this already. But on the daily time frame, the nearest resistance that probably could lead to some pullback to some respect of this area is 126.60. Since this is weekly pivot resistance 1, the daily overbought stands are also very close to this area, and that will be also the completion point of the potential free drive pattern that is forming on the 4-hour time frame. Actually, take a look at the price action during the Draghi speech, because if this move to the upside will be before the speech of the Draghi, and Draghi speech will not support this action to the upside, then this pattern will work as the real reversal pattern, and this will really could lead to some downward fast acceleration. But if this move to the upside will be in according with the Draghi speech, according with the those things that he will say, then this just could be the continuation of the short-term upward trend on the euro currency. But that's very responsible moment, and if you not sure absolutely that you will be able to trade with this difficult environment on Thursday, then probably it's better to wait for some to wait when this speech will finish and act only after that. Because if any move that will start after the speech probably will continue further. So that is our current view. It's a bit sophisticated analysis for today, and it's very difficult to make the decision right now. So probably you could invent some sort of the strategy with the stop orders on the breakout or something like that. That is just up to you, because this will be very personal and will depend on your trading style. But that is our current view on the market, and current situation doesn't look obvious that market is really have only one direction, since there are different patterns is forming that points on the potential upward move to the 126.60, as looks bearish as the consolidation on the daily time frame, and the return on this consolidation that from the classical standpoint looks bearish. So that's all for today, and see you tomorrow.